I spent an entire day looking at every share price graph of the 350 largest listed companies in the UK. I looked at how the share prices have changed over the last 5 years. Some seem to be on a never-ending downward spiral like this one, and also this. Others seem to be going absolutely nowhere. What I was looking for were companies which seemed to be on a steady upward trajectory. Dividend investing is all well and good, but if a company pays 5% dividends, but after a year the share price has fallen 5%, then you haven't really gained anything. So after trawling through 350 charts, I've selected the best 16 shares, which show a steady long-term upward trend in share price, as well as paying a dividend. Before we get started, this is not investment advice, and is for entertainment purposes only. At number 16, up 31% over the last 5 years, is Alliance Trust. It invests for total returns, including growth. Alliance Trust invests in global equities, giving you worldwide diversification. The dividend yield is 2.4%. As you can see here, they have a great track record of raising the dividend year after year. You would have almost 60% exposure to US shares, with technology and financials making up the two largest sectors. Number 15 is Scottish American Investment Company. The portfolio is mainly made up of global equities, but it also contains bonds, properties and other assets. The share price is up 32% in the last 5 years and the dividend yield is 2.7%. It's had a decent track record of raising its dividends and should hopefully continue for years to come. Its top investment is the pharmaceutical giant Novo Nordisk, the maker of insulin, and also the drug semaglutide, a promising weight loss treatment. Other top holdings include PepsiCo, Microsoft and Nestlé. It's also invested in a leading lithium producer, Albemarle. At 14 is JP Morgan Global Growth and Income plc. The aim is to provide superior total returns and outperform the MSCI All Country World Index over the long term by investing in companies based around the world. The shares are up 41% and they pay a dividend of 3.7%, and the dividend payments have been rising in recent years. This screen shows the largest companies you would have exposure to and also the geographical distribution. At 13 is Fidelity European Trust, up 53% in the last 5 years. The objective of this company is to achieve long-term growth in capital and income by investing mainly in European equities. The dividend is 2.3% and it's been growing moderately over the last few years. At 12 is RELX, the global provider of analytical tools for companies and professionals. The shares are up 54% with a dividend yield of 2.2%. As you can see here, RELX has a great track record of raising its dividends year after year. At number 11 is JP Morgan American Investment Trust. The aim here is to achieve capital growth from North American investments and outperform the S&P 500, and they seem to be doing well. The shares are up 72% over the last 5 years. And my own S&P 500 tracking ETF has only managed 58% in the same time. Dividend yield is 0.9% and the payments have been growing in recent years. If you are finding this video useful, then please give that like button a quick tap as it really helps out the channel. Thanks. At number 10 is the pharmaceutical giant AstraZeneca. Over the last 5 years, the share price is up 82%. The dividend yield is 2.1% and payments have been fairly stable over the last few years. At number 9 is Rentokil Initial. This company specialises in pest control and hygiene. Its recent expansion into America is going well. The shares are up over 85% over the last 5 years. The dividend is fairly low at 1.3%, but as you can see here, apart from 2019, the company has been raising its dividends consistently. At number 8 is the building materials company CRH. The shares are up 85% over the last 5 years and they pay a dividend of 2.2%. Apart from the odd blip here and there, the company has a track record of raising the dividend. At number 7 is the global private equity and venture capital company 3i. The shares are up an impressive 105% and the dividend yield is 2.8%. For the last 10 years, the company has maintained or raised its dividend. At number 6 is HG Capital Trust and it's up 115%. It pays a dividend of 1.7% and its aim is to beat the long-term returns of the FTSE All-Share Index. They have certainly done well over the last 5 years, considering the index they are trying to beat is actually down 1.7%. To achieve this performance, the trust focuses mainly on unquoted companies in the software and technology sectors, which has the potential to generate decent growth. The dividends have been a bit inconsistent, which is not surprising as share price growth is the main focus here. At number 5 is Oxford Instruments, which manufactures tools and systems for industry and research. The shares are up 135% over the last 5 years. The dividend is very small, but it's on an upward trend. At number 4 is the British industrial equipment rental company Ashtead Group. The shares are up 140% and the yield is 1.4%. In 2022, the dividends grew substantially, perhaps a company worth considering for long-term total return. At number 3 is Diploma plc. The business supplies specialised technical products and services. The shares are up 146% and the dividend yield is 1.7%. Diploma is a member of the FTSE 250 index and it's another company which raises its dividends year after year. At number 2 is Pershing Square Holdings. This company holds positions in large cap North American businesses and the primary aim is to preserve capital and grow the share price. The shares are up 148% and the yield is 1.4%. Dividends are a bit patchy, but there was a significant increase in 2022. And at number 1 is Premier Foods. The share price is up nearly 200% over the last 5 years, and the yield is 1.2%. As you can see here, dividends have been paid over the last couple of years, with an increase in 2022. Here are some of the products they own. This table shows a complete summary of all the shares mentioned, and for transparency, I own shares in AstraZeneca. If you had invested £1,000 in this portfolio 5 years ago, it would now be worth nearly double based just on the share price growth, and you would also get some dividends on top of this as well, at an average yield of 1.9%. In terms of capital growth, here is how it compares to a range of indices. The portfolio of 16 companies has done pretty well over the last 5 years, but past performance is no guarantee of future returns. Investing in a low-cost index tracking ETF is probably the way to go for the majority of investors. Now let's briefly return to Diploma plc, a company which consistently raises its dividends year after year. This is usually a very good sign indeed, and to see other UK companies which do this, then click this video here.